way before the Lake of the Ozarks video. They were jamming this thing Sunday night, and they got it up to 29.90. Took a little breather last night. Our pre-market high is 30.15. Keep an eye on that. And then I got another familiar number for you guys. Right when the Fed started doing their initial pump of money into the market, we went to 30, 25, 75. So that's been quite an 800-point round trip, but there's an upside target for you. Crew doing its thing, looking at the July, helping out, up 86 cents at 34.11. Who needs gold when you got a rip-roaring economy? Gold down $10 at 17.25.70. Silver going the opposite way, up 16.7 cents at 17.86. And Bitcoin down $300, backing away from 10,000, 8,875. Triple D, gonna bring you in here and what a rally.
I mean, it's the holiday weekend. Liquidity is at its lowest point. If you wanted to get the market higher, those Sunday night futures are probably the way to do it on a holiday weekend. We see it with Bitcoin. I talk about, the manipulation there. I do believe there's some players that are pushing this market higher at those overnight. We've been talking about this for 2.5 weeks. The overnight moves have been to the upside almost every single night. And then during the day, if you actually look at it, we've actually had overall losses during the day. So I don't know who's pushing the market higher, but it feels like it's just continued to be pushed higher. That's fine, though. I mean, you think about this market, it completely ignores all macro, all fundamentals. And, we don't care the companies are going bankrupt. And we don't care the 2,000 people were dying a day. I guess it's less than that. So we don't care, or we definitely don't care about the COVID now. The death rate is less. So that's where we're at. We're at a market that just doesn't give a crap about bad news, and it's going to find any excuse to rally. That's why I said I think we were going over 3,000. I said that a few days ago. I think we're going all-time highs. I really do. People are going to say, why aren't you fully invested then? Well, I'll be on my trading side. I will be. I'll tell you that. The long-term portfolio, I was saying this to somebody on the weekend, I'm bullish short-term, and I'm bearish long-term. So I don't want 100% or stocks in my long-term portfolio because I think everything's a mess. But I'll tell you, from a trading standpoint, long, man.
Yeah, you were talking about the liquidity, and I was doing a comparison of last Sunday night versus this Sunday night, and it was about half of the volume, just a little bit less than half of the normal volume. So
what about, so here's, so obviously the volume is very light. Like, just give us the overall contract numbers and then compare it to like what it is. Because what I've been arguing is that liquidity is so low, volume is so light overnight that you actually have, if you were going to push this market higher, you're going to not come in at 10:30 in the middle of the day to push it higher because there's just too much action. There's too many participants. Everybody's, enjoying their family, enjoying their weekend. So if you really want to jack this market higher, and we know our government wants this market higher, I don't know who is behind it, but I really feel like it's being pushed higher intentionally overnight, at least in the last couple of weeks.
Oh, you cannot dispute the fact. And I'm going back to the 24th, which was Sunday, right? And here's the volume on Sunday night. These are hourly brackets: 7,000, 3,000, 3,500, 7,000, 3,000, 2,000, 1,500. Okay, so you get the theme here, right?
Okay, let's comparative. So those are just numbers. What is an average volume at like 10:30 to 11:30, and in the middle of the day? So we're trying to tell you this trading like 1,200 contracts for the entire hour overnight. Okay. How many contracts are trading in a typical hour during the day?
So we got to go to the 22nd.
Go grab any hour, middle of the day. What's up?
Okay. Boom. 85,000, 100,000, 57,000, 40,000.
So 1,500 compared to 57,000 contracts in the same hour, like over an hour period. So you're talking 30 to 40 times as much volume.
If you compare the overnight session to a busy hourly session, yes.
30 to 40 times. So if you, just the case, I'm just making the case. If you were trying to push the market higher, and I believe there are some participants trying to push the market higher, when are you going to do it? Are you going to go when, there's 57,000 or 100,000, traded contracts here, and it's going to take you billions of dollars to push it higher? You're going to go with a nice little overnight session where, we got 1,500 contracts traded and the liquidity is lower. You're going to go to where that's low liquidity. And if we've seen the action the last couple of weeks, they're just pumping them up overnight. So, the trading strategy is long overnight, I guess. Long overnight. I don't know if it's short during the day, but it's definitely long overnight. It's been working very well. So whatever it is, whatever the reason for this rally, you can't fight this tape. I mean, when the market won't go down on as much bad news as we've had, we got Hertz bankruptcy Friday night. Nobody cares. We care about Hertz? Nobody cares. HTZ gone, bankrupt. Doesn't care. You'd think, oh, okay, well, maybe Avis Budget's having a sympathy move. Hell no. We'll buy Avis Budget. We'll just buy that too. It's the same exact business model, very similar to it. But you know what? What's bad for Hertz has got to be good for Aegis. Less competition, right? So let's just buy car. I mean, that's the way this market is. I'm not going to argue with it. I'm going to argue if you're buying car right now. I'm not going to argue with you if you're buying anything. I think the market goes higher. I'm not buying the market when it's up 500 points, but we pull back tomorrow, which we seem to always do. We're yo-yo. We never go straight up. It's a buying opportunity. The market just wants to go higher. We're going to have China headlights. Here's going to be the headlines that are going to bring us down on the little overnight dips. We're going to get into a trade war with China here again. There's no doubt about it. With the way Trump, he's going to be tough. He's got the market higher here now. He can play a little bit tougher. I mean, so you're going to have China headlines that are going to come in that are probably going to be negative. Obviously, we have the delisting, potential on some stocks. It's always going to be some negative headline to buy the dip on. But those dips just appear to be buying opportunities. I'm not going to argue with you. The best strategy in the last 10 years has been to buy the dip. I screwed up by not buying that dip back on May 14th after I kind of felt like, we were going to pull back, but I did not reload my portfolio, and I should have. So my mistake. I'm going to stay on the bull camp here until this market tells me to get the hell out. And it's not telling me that right now.
And I think once you get the ball rolling in one direction overnight, I think the algos catch it, right? And they could just, keep the momentum going. So, all you need to do is just get it going. Just get it going a little bit. And then with the less volume, lift and offers. I mean, especially if you have, software that's reading the book and the matrix or whatever, and you see like these 1,000-lot bids underneath and the spoos overnight, they're gonna pick up on that. I have not been looking at the ladder overnight, but there's a lot of different factors that are going into it, and the drug news on top of it, because that was the first thing I was like, oh, we got good vaccine news. I'm like, well, the spoo's been rallying since Sunday night, and that news that wasn't out there, so it's a lot of interesting dynamics. I'm just looking at 30, 25, 75, March 6 high. That was the day. I think the Fed, I don't know if they went to zero that day. I did look at it, but I remember that watershed mark, and then that was a peak. So quite an 800 point round trip, but man, blink of your eye, and this is where we're at.
This is this market. So it's hard to, and then you see those videos over the weekend. You can call it the Ozark rally. Great show, by the way, on Netflix. But you can call it, I can't stop thinking about, the show when I hear about the Ozark. But you see all the videos of the people out there just enjoying the weather, and they're out there just giving her, like, there's no real worries about social distancing from those videos of everybody swimming in that pool at the Ozarks. Spencer, you were arguing the same point too, right off the hop. I mean, this is just... the rally could also be attributed to a certain extent to reopening. Everybody's excited for the reopening, and they're seeing videos like, man, we're getting back to normal here. There's been, a third of my Twitter timeline that's been calling for the reopening ever since we shut it down. So a lot of people are very happy about this. And the reopening is good for stocks. There's no doubt about it. The question are we going to stay reopened? Are we going to have to go back? We don't know the answers to all those questions yet. I'm obviously still have a lot of concerns, or I wouldn't have as much cash in my portfolio, but it's been a mistake. I mean, it's been a mistake to not be buying every single dip that we've got. So will I buy dips? Probably on my long-term portfolio. I'll probably be buying dips, trying to get cash back to work along with every other money manager. So they've all got the same problem that I do, that obviously, I have the luxury that I trade. So, I'm already, I can buy and sell stocks, and, I have a trading portfolio as well.
Yeah.
But from an investment standpoint, I'm very underweight. And it's an issue. And I'm probably going to be looking at earnings opportunities, different stocks, just like CyberArk last week pulls back. I'm like, I need to get stocks. So here I got a 20-point pullback in a good company. I'm going to buy it. I'm going to buy the dip. And you know what? It's already paying me. I did the same thing, with Target originally. Every time we get an earnings dip on something, on a decent company, I'm buying it. But today isn't even really a rally of all the good companies. It's a rally of the trash. The trash is rallying. The reopening. That's why it really is a reopening rally. Look at Boeing. Boeing up 5.7%. Look at the airlines. They're all up 5, 6, 7% here this morning. So this is more of a dash to trash than, you look at Apple this morning and it's up 1.5%, but not even up as much as the market. Amazon only up 0.67%. Again, Amazon, not so much of a play on reopening. So a stock like that isn't going to participate as much. So it's interesting dynamics, this market.
Spinner made a point here that a lot of people, over the years, except for like the last 6 months or whatever, a lot of people go home short on the weekend, right? There's a lot of negative things that can happen in the European markets. So that could be another factor, short covering.
I would not want to be short this market. And I've been saying that for a while. Yes, I've been underinvested, but being short this market, you are fighting. Just look, at a stock like Disney. They slashed the dividend to 0. I don't know if they've even ever did that. It's just suspended, obviously. They're going to get it back eventually. But it's unbelievable. The parks aren't open. It's 38% of the revenue. The movie studios aren't making movies right now. There's so much. And obviously, we're just pricing in that we think it's all going to go back to normal. It's $120 a share. And don't tell me it's all because of Disney Plus, because it's such a small portion of the revenue. But it doesn't matter. Disney here is back to the highs that it was making before we had the Disney Plus rally. It's right back at its all-time highs if you get the Disney Plus stuff out of there from 2019.
Correct.
So yes, Disney Plus helps a little bit, but it's not a difference maker at this point in time for Disney. They're burning some significant cash right now, but none of that matters. None of that matters because we're all going back to normal. That's what the market thinks. It probably, maybe that's the case. I hope it's the case. I hate being locked down, but I can't, rationalize coming and buying stocks for my long-term portfolio and investing in Disney right now. I can't rationalize it. So that's why I'm not doing it. I can rationalize buying a Microsoft on a pullback. I can rationalize buying even Apple on a pullback. I can rationalize buying Amazon on a pullback. I can't rationalize coming in and buying Disney because it's not even really down that much. It's not even cheap relative to really where the earnings were just last year. And I think it's going to take years for them to get back to where they were. So makes no sense to me a stock like Disney, but there's lots of stocks that do make sense. So we can go to some individual issues.
Well, there's also the talk with Disney that they're in talks with the NBA.
Yeah, I mentioned that to you, Dennis. Go ahead. Yep.
To resume the season, basically on an island in like just in Disney World. Everyone's gonna decamp to Disney World, and they're gonna play out the season at Disney World, essentially.
Just a playoff, just the top 16 teams.
Well, they haven't really decided yet, but yeah,
which everyone's been clamoring for, anyways. If you're an Eastern Conference team, you're going to get the boot here for the Western Conference team. But and also just going back to the normalcy of the weekend, I did some social distancing golf, but I usually do that anyways because, like, when I'm on 8, my ball's on the 9 fairway, when I'm on 11, 12. Right. And then also, I actually got in the pool for the first time in 3 months. So did I think that would parlay into a 55-point rally in the S&Ps? Not, but
hey, a lot of people got that pool in Ozark. That's the reason.
I went to the store. I haven't been to the store.
You went inside a store?
I went inside a store. I was wearing a mask and everything. Yeah, but I haven't been to a store probably, I don't know, March.
I haven't either. I haven't been into a physical store. Yeah, I went. Last week was the first time I was anywhere. I had everybody knows if you've been listening to the show, I've got glaucoma. So my parents have this genetic thing. I had my 1-year checkup since I had my glaucoma surgery. I was supposed to have it at 6 months, but I got the doctor wasn't around, and then I got pushed, and then the offices were closed. So they wanted to check it. I was honestly scared to death to go into that office, but I did it. I masked the hell out of myself. And, I did everything I could. I actually put on 2 layers of clothes and, call me paranoid, but I think a doctor's office and an eye doctor, sounds like not that clean of a place. And it didn't appear to be that clean, to be honest with you either. But, I really, that was the first time I was anywhere too. And, I did as much as I could. I put 2 layers of clothes on, gloves, the surgical gloves. I had my mask on, I even had goggles on for a bit, and then, they look at my eyes, and they're very nice in there. But I mean, it's a lot of people coming in and out of that place. So, it's a little bit concerning, but you know what? I mean, we got to go and take some risks here eventually. Am I going to go swimming in a pool with 1,000 other people? No. But people, we've got to start taking some risks. There's no choice in the matter. We do need to eventually get back to some normal course of life. So, I mean, that's where the market's rallying, is that we know it's reopening, and people are going to start going out, and people are going to start doing stuff. And that's good for business. So and if infection rates stay low, I mean, we could potentially, see some light at the end of the tunnel here.
I would even argue not stay low. I would even argue, as long as infection and death rates don't go back to
skyrocket.
As long as they don't exceed mid-March levels and late March levels, then why shouldn't the market go higher? I mean, what is there? We have our worst case scenario to date is what we saw in mid to late March or in early April, as far as death rates and active cases. And so that curve is flattened, and some places gone down. So why shouldn't we be excited here? I mean, as long as it's not getting worse, you know what I mean?
There is reason. There is a reason for optimism. It's just the fact that people think stocks are cheap. And yes, some stocks are very cheap. I mean, when you go and, people are saying, I was calling Boeing trash. I'm saying all these stocks are in ground zero. You could say the company's not trash. Boeing's great people work at the company. I'm not calling the company trash. I'm saying the stocks have been trash. The stocks have been trash. The chart shows you that. Boeing's been in a lot of trouble for a long time. The airlines have been trash stocks for a long time. Where they've had they're having nice rallies here, but they have not participated nearly as much as some of these tech darlings. So yeah, some of these stocks are cheap. I mean, if we do go back to our normal course of life, some of these stocks are very cheap. So, if you think, we're going to all start flying again next year, there's probably an argument here to buy all these airline stocks and to buy Boeing and stocks like that. I argued last week to buy Boeing. That I gave you even a trade setup. I gave you a trade setup, a 133. I gave you a trade setup and said I would stop out at that low of the move 125. I said maybe it's not for me because I don't want to risk $8, but here it is. It's 145 now. It's 12 points higher. So it's turned. I mean, they're looking at those stocks now too as buying opportunities. The money managers are like, what hasn't rallied? Let's buy that. And that's what you're seeing here this morning. People are jumping into those stocks that have not participated. So maybe I shouldn't call them trash stocks. I'll call them laggards, just because some people are taking offense to me calling them the trash stocks. Laggard rally then. They've been lagging the market significantly. There's a lot of laggards out there. Some of your oil companies, your restaurants, some of them are starting to show some life. I mean, Halliburton has had a significant rally since the lows. Still way off from where we were in February, though, where you look at some of these other tech stocks and they're trading way above. So, there's opportunities out there if you believe everything's going back to its normal way of life. I don't believe that's why I'm not buying these stocks. But Dennis, I could be wrong.
So, Dennis, you agree with the point that someone made in the chat that you want to punch some of these charts in the face?
Yeah, for sure. Yeah, they said Dennis wants to punch some of these charts in the face because they don't make any sense. That's totally true. I mean, some of these stocks have just had such ridiculous rallies, valuation. I mean, Shopify has been unbelievable. I said it's going to 1,000. It is. It looks like it's going to 1,000. I said this 150 points ago, and I'm mad at myself that I sold some of it. So yeah, I'm frustrated as an investor here because, I trade with momentum. I trade with the flow, completely different animal. Trading is fine. People think, oh, Dennis is doing really bad here right now. And I've said it before. These are my 3 best months of trading in a decade. Boom, boom, boom. Like 1, 2, 3 so take the last, 12 months in a year. So the last 120 months, my best 3 months, 1, 2, and 3 are March, April, and May of this year. So my trading is awesome right now because I'm trading in efficiencies. I'm buying and selling. I'm scalping. I'm doing other things. My investing has sucked, completely sucked, because I haven't participated in this last month and a half. So despite, doing very well in my trading, I should have been buying every dip, and I've been underinvested. I got out. My January and February were much better than other people's or my March, because I didn't lose the kind of money that other money managers did. But I didn't get back in. And that was my mistake, is I didn't get back in. And I should have just went all in, but I didn't think the coast was clear. Apparently, I was wrong. So I should have been buying those dips in my long-term portfolio. And
who our guest is? You know who our guest is today?
In other ways.
You know who our guest is?
Who's that?
Craig Johnson.
Oh, great. Then Craig's been right. I mean, Craig's been right on this from the long perspective. It's been a choppy road here, but he came on when we were SPY 280 and said buy stocks. Craig's been absolutely right. So I want to see his argument. I've turned. Like, I think we're going all. I don't see why not. It doesn't make any sense to me. I'm not going to go all in on the market here on my investment portfolio because I can't logically make sense of it. And I trade on logic, or I invest on logic, and I trade on feel. My feel is that this market just wants to go higher. Everybody can feel it. I mean, we don't have any reason. What you look at Beyond Meat. Looking at this flyby. Does fundamentals matter on Beyond Meat? No. It's sit here. Look at the trading. It's sat here and consolidated here. So let's just talk it technically. It sat here in consolidation station for a week and a half. Which way do you think this thing's going to resolve? Just from a chart. Don't think about it as Beyond Meat and trading with a ridiculous valuation.
Yeah, it's going
had the
to
run
consolidation
up.
move
It's
higher.
consolidation station. I think it's going to resolve higher. I think Beyond Meat's going to go break out here again. And does it make fundamental sense? No. But does it make trading sense? Yeah. It's in consolidation station. It's ready to go. So it's tough, to always have two different hats on. And maybe I should just take my investment money and let somebody else manage my investment money because I can trade a lot better and I can invest. I'll tell you that much because from an investment standpoint, I'm underinvested, no doubt.
All right, we did have some vaccine news. I know that it's definitely secondary to everything that's been going on in the market, but Lisa and I were talking about some stocks, and she mentioned Pfizer to me. She's like, because of their history, and I said, man, that stock we owned it for a while. It's gone nowhere. It's trading up today, but I think she was on the right path, but Merck up 334 today, 79.71. Couple acquisitions. They're getting involved in the vaccine process.
Yeah, so Merck acquired a vaccine company, Themis Biosciences. They also announced a collaboration with IAVI for a coronavirus vaccine. So they're jumping in. And then Novavax this morning announced that it's begun its phase 1 clinical trial of its coronavirus vaccine. So two positive headlines, definitely helping with the general sentiment this morning.
I own Merck in my long-term portfolio. I've had it in there for a decade. I'm probably going to stick with it, although I have sold shares out of there. I haven't held them all, but I'm probably sticking with what I have. I'll tell you, though, I wouldn't be buying Merck up $3 on this news, especially because this company's held up the whole time. I mean, if we really think we're getting out of this, these drug stocks that have been leading the charge will not lead the next rally. So if you think we're stuck, then there's still going to be a good place to hide. So if you think we're going back into lockdown, the reopening is going to fail. But if you're buying Merck as a play on reopening, I think you're wrong. I think this is the kind of stock I would actually sell into rallies. The drug stocks I would actually sell into rallies right now for the simple reason that this market, is got the bull hat on, and drugs are a more defensive play. So nice rally for Merck on a defensive on a risk on day. As a day trader, I'd be selling Merck.
Well, you would have been selling it at 81 when it popped up there. It's between 7 and 7:15 this morning.
I would have been looking at it.
Yeah, on good volume. Came back and is making another run up here at 80.20. I think I'll just keep an eye. We had a high last week at 81 even. So I don't know if we're going to get there. That's $1.40 away. We got the last week's high. Use that. I mean, that coincides with the pre-market high. I think the longer it takes to get to 81, you might give some back some of these gains. A pretty thick stock. I don't know what you have holding you down at the book. Maybe it looks like it might not even open over $80, Dennis. You see anything?
I think you probably got size at 80. I don't have the book open. JV spec if you're there. There could be some size at 80. I wouldn't be surprised.
I mean, that's and what we talk about on these kind of trades is, they're stocked, they're good till canceled orders on the New York book. They're put in a week, 2 weeks, 3 weeks, a month ago, whatever. Or we did trade up to 81 last week and then traded as low as 76. So they'll say, hey, if this gets back to 80, I don't care what the circumstances are, I want to sell the stock. And so you'll see some good GTC orders at the different levels.
And that can stop the rally.
It's still, the rally.
If you just think about it, if you want to put it, to a metaphorical standpoint, I mean,
sure.
You've got trading and it's all kind of open. And then all of a sudden you've got Carey Price goaltender here, huge stopper, and it's going to, bounce around the puck. But, when it gets to this point, it has trouble getting through the goalie. So these big size can actually be like, these big orders on the book act like a goalie to stop the puck and it bounce off there, bounce like shoot enough times that eventually get the puck through and the stock can break out. But usually the first or second shot, I mean, these goaltenders save 90% of the shots. So when you get big size in the book, and we're just speculating because it's a big whole number on Merck, that it takes a lot of money to push it through those prices.
I like that. I like the old sports metaphor there, Dennis. That was a good one.
That's right. Canadian. I got to throw in the hockey.
Yeah.
So two questions now. One is sort of readjusting pricing based on lowered earnings, or how the adjusted earnings are going to impact pricings evaluations. And two, if we're going to buy everything here and we're going to bet on a general reopening, well, there are going to be some industries and some trends that just never come back, right? And those might get bid up now in the short term, but they'll never come back in the long term. So the challenge will be finding those and not just buying up everything, but figuring out which of those industries never come back.
What about Avis Budget? So we see Hertz go bankrupt over on Friday night. And you got Car here getting bid up again. And, it can squeeze them for a bit.
Sure.
But this was an industry that was already under attack from Uber and Lyft. It was already under attack, and if travel stays down for a while, I mean, this is the kind of stock that might not bounce back. I mean, even your oil companies and stuff, you've got to look. What I want to own going forward are sectors that were actually performing okay before this whole COVID thing started. I don't want to go and buy Macy's here at $5.42. Could it go to $7 or $8? Sure. But let's be honest. Macy's feels like it's going the way of JCPenney. And, you got a big box store that was already under attack. It was already, you can see, look at the chart from the last 2 years. Before COVID started, in the last 2 years, Macy's went from $35 to $15. It was sitting near a 52-week low when COVID started. This again, okay, we get out of this. It's going to help Macy's a bit. And maybe, you get a little bit of life. But at the end of the day, people like shopping online. And you know what? A lot more people like shopping online after this. There's people who didn't shop online that realize how easy this is. And the Amazon, shows up at your doorstep. And they're like, this is awesome. This is so much better than me going and having to go to the mall or go to here and get my thing. I just go online, I find what I want, it gets delivered right to my doorstep. So online shopping is not going away. It is going to continue to dominate. And if you are fighting that trend, like some of these big box retailers, you're in trouble. So those are stocks I would stay away from. But there are opportunities out there. And, there are still some stocks that are cheap. The question is, that people have been pretty smart about it. They've really rallied the ones, obviously the Shopify's and stuff have really rallied, the online retailers that focus on that. Yeah, they've really rallied. Would I buy Target though on a more significant pullback? I sold it because I thought it rallied too much. It's about $5 from where I sold it, $4 maybe, lower. Down to 110 again, I get interested. Would I buy Kroger down around $28, $30? Probably. But I mean, there is opportunities here.
Dennis, I think you need to realize that maybe that you might not get that chance.
On certain stocks, you always get the chance. And this is the flawed thinking. So I have, invested for a long time. You always get another chance. There'll be stocks to buy. Don't kid yourself. People, this is what FOMO is made on. They think if I don't get on this train, I'm going to miss the boat and this is going to be my life opportunity. There is another trade every single day you never have to chase. This is how I've been in business for 20 years. If you're panic buying, you almost always are going to be buying at a poor price. If you're jumping in today because I have to get in, we're listening to Dennis. He said we're going all-time highs. I've got to buy stocks today because this is it. I'm saying buy dips and sell rips. You know how many dips we've had in the last couple of months? There has been a lot of dips. We'll get another one. There's going to be a China headline coming. That's going to be the next thing. That's going to be the overnight, like China headline comes. We're, battling on the trade war front here again, and we're down here. We're going to delist some Chinese stocks. There's always something. So you never have to chase. There's always another trade. I've lost a lot of money chasing moves. So if you make money chasing, by all means do it. I'll tell you from my experience and as a prop trader, I've seen a lot, and you too, Joel. We're in the prop world for a long time. We've seen a lot of traders come and go. Almost all of them have similar tendencies that they are scrambling around, looking for the next idea, grabbing this chart, grabbing this, this one's going, I got to jump on this train. And what happens is they're jumping on a moving train, and a lot of times they fall into the tracks. I like to jump on the train when it's not moving, when it's in consolidation station. Beyond Meat, for instance, that's not a bad trade. I mean, it's up now this morning, but if you were looking at it on a Friday and saying, we're in consolidation station here, and 131, I could stop myself out. I'm gonna see risk myself $5 and see if this thing's got more legs. Well, this morning it's getting legs because of the overall market. So there's always another opportunity. You never have to chase.
All right, I just wanted to do real quick. We looked at the Merck that was moving on. I just want this Novavax. I just want everyone to be aware that it was much, much higher than where it's trading now. So you're all happy. It's up 689.
NVAX.
Right. Yeah, NVA. It went to 63.19.
Chasing, people chasing, getting
there you
murdered.
Go. Great example.
Moderna, you guys, whoever was chasing that up at $93, it's $67. Gilead, whoever is chasing, $86 on the day of the news. I sold it them. And that's what you've got to do is when you get these spikes, you take the money and run, especially on these vaccine plays.
These vaccine stocks.
This has happened again and again and again, where you get positive news from some trial and they rip it higher. And by the time the thing opens, it's already given up half the gains. And then in some cases, it gives it all back. So Gilead's case gives it all back. Moderna's case gives it all back. Could Novavax give it all back? It could. I'm not saying it's going to, but this trend was definitely down for 4 days. There are people coming in this morning and saying, oh man, I bought $55 last week. I can get my money back. Sell, sold to you. So you've had a huge spike. You're not buying it cheap. I mean, this thing was $20 at the beginning of May. Now we've got over 60.
Don't quote me on this, but wasn't the Gilead? Didn't a lot of these companies saying that they're not going to make a lot of money off these? Don't quote me on that, but I thought that Gilead and some of these other companies were. I mean, I don't know if they're just doing this to for benevolent causes or whatever, but when these stocks are rallying, and you got to think about when they're coming to market, how much they're going to charge, when it's going to fall through the bottom line. That doesn't make any difference right now, but eventually it will. And I think that's what, Gilead, I mean, like you said, when it had those pops, yeah, it was good news. Everyone wanted to hear it, but in reality, when and how much is it going to add to the bottom line?
Not much at all. For a Novavax, it probably would be significant, smaller company. But yeah, when you see these mega, and Gilead is a mega cap, when you see these $100 billion companies rallying 10, 15% on, a potential therapy, it's a selling opportunity because the math doesn't add up. It is all about the math, Joel. And you can look at, when you got a small company like Moderna, it can really rally because it's so small on the market cap. What's the market cap of NVAX, Spencer? So it's going to have
I have it not adjusted for this morning's action, so I can tell
what was it then?
Tell you what it was. Give me a second to look it up. Craig Johnson's here in the background, so I'll bring Craig, I'll bring Craig on in a second here. But Novavax, I'm seeing market cap of $1 billion.
Yeah, so $1 billion company. So I mean, it makes a big difference to them.
Plus 20%. Or whatever it's up today.
So $1 billion too. I mean, it's a small company, so that's why you see these wicked rallies on these smaller vaccine plays. You're not going to see when Merck's trading up 4% because they're buying a vaccine play. It's probably a selling opportunity because again, Merck is a huge pharmaceutical company, one of the biggest pharmaceutical companies in the world. Is it worth 4 or 5% more today because of a vaccine play? Probably not. That's why Gilead was a sell on its news. So it all depends on the size of the company too. But when you get these wicked rallies on these mega caps, sometimes it's a selling opportunity. Let's bring in Craig. He has been spot on from our last time he was on the show. Craig, what's going on?
Thanks, guys. Thanks for having me back on the show.
Well, we have you back because you were spot on. If you were wrong, we wouldn't have had you back. Just kidding.
That's how it should be, though, right? If you're wrong and wrong for too long, you shouldn't be back on. You should. You gotta stay on these trends.
For some reason, they invited me back
guys,
on.
Thanks.
So I was arguing with you on some of these stock picks that you did last time. When was Craig on? Let's go just back to the tape. He was on. We were around 2,800 on the SPY.
Craig was on April 9th, and he was extremely bullish, and we were very skeptical. And look who's talking now.
There we go.
So
what the big question is though, what is Craig's opinion now? Now that we're up 200 S&P handles from the month and a half going down, is Craig still bullish?
I'm still bullish. I'm sticking with my 3,600 year-end price objective. on the S&P 500. I do think that this market does have to perhaps consolidate a little bit over the summer months, but I've always been thinking that this market probably gets stuck in some sort of trading range somewhere around 3,000-ish, near the 200-day moving average. And then the lower end is around 2,800. And a week or so ago, we tried to push through 2,800. It didn't happen. And now we're testing the upper end of that range. And just from a technical chart perspective, if you look at the entire decline from the February highs to the March 20 lows, we're going to be testing right up to that 61.82% level, which was right around 2950. And if we go test the next Fibonacci level, you're going to be looking at about 3115. So somewhere here between the 200-day moving average and that 3115, I think we got to take a breather and see this market go sideways. But it's just going to be one of these, I think you called it consolidation at the station, something rallies, if I'm not mistaken. And then I think you're going to sort of move higher into year end once we get some clarity on what the election looks like.
Craig, how do you come up with a 3,600 target? I mean, obviously technicals are a part of it, but you're also looking at the overall picture here. How do you come up with that target?
So when you go to McDonald's, you ask him what's in the Big Mac sauce?
He doesn't want to talk. He's got the secret sauce.
No. But listen. I'm happy to tell you. And let me tell you something. I learned how to set these price objectives from a gentleman by the name of Ralph Acampora, who I'm sure has been on your show.
Yep.
He learned it from a gentleman by the name of Ralph Rottenham, who learned it from somebody by the name of Charles Dow, and those folks going back a lot of years. So what I do is I look at point and figure objectives on every single stock in the Dow. I sum it up, I divide it out by the Dow divisor, and then I make a ratio looking from the Dow over to the S&P 500, and that's how I set my price objectives. It's been a pretty good way to set price objectives because it has nothing to do with earnings, and right now we have no idea what earnings are for a lot of companies. It all has to do on that forward-looking discounting mechanism called the market, and my numbers have only been getting stronger. In fact, since I was on the show last, I went and I updated that model. It hasn't changed plus or minus 2% since I've set that objective back in November, December. So, I mean, we're moving in the right direction. We're continuing to see states open up. We're continuing to see some of the shutdowns set aside. We just got through Memorial Day and we didn't have a massive, second wave start to come in. And I got to tell you, we are truly climbing the wall of worry out there right now. And as I've been saying to a lot of folks last week, I think we have to rip the rear view mirror off the car at this point in time and not drive in the rear view mirror, because we're looking forward at this point in time. As we're starting to see things open up, we're seeing that the infection levels are not as high as people were thinking. And at this point in time, I feel very comfortable with my 3,600 year-end objective, and I'm actually starting to see the street starting to come up toward that number.
Craig, give us some stock picks. Is there anything that you gave us Darden Restaurants last time you were on? And it's up pretty good from last time, from April the 9th. What else are you looking at? If you can't give specific stocks, what sectors would you be looking at here? Obviously, we had an incredible rally in tech. What are your thoughts here on specific stocks?
So I love giving people opinions, right? And again, keep in mind, I'm not always going to be right, but I like to have an opinion. And I think one of the biggest tragedies on Wall Street on the sell side right now is people come out and they say, well, this, and then maybe that's that, and they don't give you a real answer. I like to be very straightforward and concise. We should be right now overweight the tech sector, we should be overweight consumer cyclicals, and we should be overweight healthcare. Okay? We should be underweight basic materials, communication, media, and the utility sector. And again, this is all based upon the Piper Sandler long-term standing total return relative strength work that we have done here at this firm since the early 1980s, started by a gentleman by the name of Steve Leuthold. And those are what that work is telling us to do right now. Individual stocks, I called out in our morning research report, Abiomed, ABMD. We like Big Locks, ticker BIG. We like NVIDIA, NVDA. We like Pluralsight, PS. We also like Take-Two Interactive. Now, stocks we don't like, right, that look weak. Equity Residential, Cooper Companies, ticker COO. Mondelez, MDLZ. Mylan, MYL. and also Omnicell, OMCL. Those all look technically weak to us. So again, from my perspective, thinking about the market, thinking about the backdrop, number one rule of investing comes to mind for me, which is we don't want to fight the Fed. We want to find that best relative strength out there, and we want to get squarely positioned for it. I'm not saying day trade it, but if we look out 1 year from now, I think we're going to be very pleased. And some of our longer-term models, like our 40-week technique and our 26-week new highs indicators, guys, they both flipped into buy signals in the last couple of weeks. And I continue to see the breadth of this market expanding. And as that plays out, this market's going to continue to work higher. And I've said here on the show before that when the market breadth got as weak as it got in March and April and time frame, it's like putting that beach ball below the water line, and then you take your hand off it and you watch it snap back. Again, there's going to be this FOMO rally. I think it's happening. And with today's price action moving above that 200-day moving average, I really think that you're going to see a lot of the computers start to kick in. You're going to see a lot of people saying, I've missed a big chunk of this move. Begrudgingly, they have to participate, not from a day trading perspective, because I agree with you. Some of these drug stocks that have gotten way bid up have sold off. I'm just saying, looking out 6 and 12 months from now, you'll have some great opportunities. And I usually see these breadth measures really substantially move higher from here. So by 3,600, I think is a very good number.
We're on the line with Craig Johnson, Managing Director, Technical Market Strategist for Piper Sandler. I did not hear you mention the banking sector or their financials. Could you just make a brief comment on those sectors?
So I go through and I look at the charts and I look at all these sectors. Now I've got financials rated neutral at this point in time. And as you guys recall, and for all the listeners, I put the whole market into a normal distribution. 3 overweight sectors, 3 underweight sectors, which I mentioned, and then 6 neutrals. Financials fit into a neutral from my perspective at this point in time. I look at charts like Wells Fargo, U.S. Bank, some of these names. They don't look very constructive technically at this point in time. I just hope that the financial sector can at least be sort of an inline neutral participator, because if we see a divergence with the financial sector versus the rest of the market, we're going to have some challenges in the future. Not today, not tomorrow, but in the future. And right now, they are sort of a weak participant at this point in time. So from my perspective, I still think of those as a neutral. We do own some of those things in the model that we run. We own things in there like Allstate, American Express, CME Group, Goldman, MasterCard, Truist Financial. So we got a pretty good diversified mix of pieces inside the financial sector, but I need to see more from them. And stocks like Visa and MasterCard still look like names that should still be bought. There's a trend like your online retailing you were mentioning before you brought me on. That's not going away. There's going to be even more done with Apple Pay and more done with credit cards than done with cash going forward.
And then, Craig, just following up on that, I'm not sure if you mentioned energy, but you definitely didn't mention real estate. So I want to ask you about those two sectors as well.
So thoughts in terms of energy. I mean, talk about a sector that has been absolutely dragged through the mud at this point in time, right? So there's a lot of negativity out there. There's fear of further bankruptcies, those kind of things. Some of that is sort of getting alleviated. It's like somebody's got the boot on your neck at this point in time for the energy sector, and they just sort of kind of took their foot back a little bit as oil prices have started to rebound to a degree. I'm not saying that it's going to be perfect by any stretch, but they've been so beaten up, so beaten down that they're certainly due for a relief rally that could be more protracted, extended in time than what people are looking for. And I got to tell you, from all the calls that I've done since publishing this month's Informed Investor book, which I titled Pause Before the Pop, and that's going to be the pop into year end at 3,600, I got to tell you, nobody cares about the energy sector. Nobody's interested in it at all. And therefore, I'm starting to find some opportunities out there. Stocks like Helix, HLX, look really interesting to me on the small microcap side, and I still continue to think some of the larger cap plays, such as Chevron, still look interesting to me. We own Pioneer Natural Resources in our model portfolio, along with Kinder Morgan and EOG. Now, in terms of the real estate side of things, those were kind of your bond proxy substitutes, that and utilities. So I think you're going to see those names potentially weaken because we think 10-year bond yields are going higher into year end toward 1.50 to 1.75%, which is a meaningful move from the 60 and change basis points we are now. But you can't print all this money into perpetuity and not eventually get some sort of inflation stoked. And I think you will start to see 10-year bond yields move up gradually and at a measured pace that will not cause any disruption to markets or equities, but will be done on a gradual basis.
Craig, do you recommend any hedging tactics for your clients?
We haven't really done much in terms of hedging tactics. I would say, though, if this is a market that is going to be sort of flat going through the summer months, once we get up to this kind of 3,000, 3,115-ish level, which is that 76.4% fib level, what I would say is write some covered calls. And if you get some of the stuff pulled away from you, so be it. I think that could be an option for people to think about if they want to trade it, not only from an institutional perspective, but certainly from an individual investor perspective. It's a pretty safe way to generate some additional income.
All right, Craig, we've been easy on you so far. How about the auto? How about the auto sector?
I am personally waiting for the Ford Bronco. Okay, that's on my shopping list of things that I want to get. As I look at the auto sector, I highlighted that in this month's publication. I also highlighted Tesla as probably one of the more constructive, interesting-looking stocks. I look at Ford, I look at GM, and they really have not participated to the same degree as a lot of other areas, correct. And so as I look at those names, even though I want to get a Ford Bronco when it comes out, hopefully soon, I still look at these stocks as there's other places that I'd rather be.
All right, Craig Johnson, as we mentioned, is a managing director and technical market strategist at Piper Sandler. Craig was on the money when he was on in early April, and we loved his commentary today. Craig, thanks so much for the time.
Thanks. Have a great day.
All right. 8:50 here, guys. About 10 minutes
just inching up towards the highs of the session. 30.15, that stands as your high. We backed off, but we didn't back off much. Not much in here for you. As I said, 30.25.75, your March 6 high. That's when the Fed started the first of their several moves. After that, I mean, the only reason I cheated and had up to 30.71 on my sheet today was when you look at the SPOOs and they're up, 40 handles. It's Sunday at it was early. It was early in the morning, and I was watching it trade a little bit around news yesterday. It's the only reason I cheated up to that area. So everything pointing north at this point. Triple D, are you seeing anything there that's just not keeping up with the market? Did we lose Triple D?
He muted himself.
Look at this. Look at that. It's been a while since I screwed that up.
I love that.
Joel's been on a roll, too. He hasn't muted himself for a while there. So, yeah, the old mute trick. Looking at imbalances, so just quickly. Again, what you're saying, Spencer, this is a rally across the board. What we're seeing down here this morning, if I'm looking, I'm only seeing a few defensive names. Clorox trading in the red. Again, that moves counter to the market as of late. But, gold stocks. But from an imbalance standpoint, a lot of buy imbalances and across the board. We're going to open strong. Coca-Cola, $343,000 to buy. You think of that as a defensive stock, but not so defensive here this morning. Right now, trading up $1.27, and obviously good reason with the big buy imbalance that's sitting there. Bank of America, $654,000 to buy. Citigroup, $112,000 to buy. AT&T, $695,000 to buy. Even AT&T having a rally here. Thoughts? Let's just stop at AT&T for a second. And Verizon, because here's two communication companies that have not participated really in the rally at all. Verizon actually in the last month is down $4, and AT&T, if we're looking, again, this has been a rotation. We know into tech. Tech has led the charge. These companies don't have the growth. Is there a place for AT&T in your portfolio at 6.83% dividend? It's up $1 here or $0.50 here this morning. I don't know. I sold my AT&T a while ago.
You've never been a big fan.
Because I think the margins eventually get squeezed. I think they have a lot of businesses that aren't doing well. I like to buy good companies that are operating, with growth. I just don't see where the growth is coming for AT&T, which is why I've always kind of been a little bit shy on it. But the 6.83% dividend is attractive.
All right, let's just take a look at the AT&T chart, and it's sleepy. It's up 56 cents. I mean, doesn't look like it's getting away from you. Major resistance, the high of the rebound has been 31.05. So keep an eye, see if there's some paper stacked at 31 even. Let's look at Verizon. Verizon is trading up 50 cents. That's a ways from its high of the move, but let's see what happens with 54.64. You're opening in your 2-day high, your 3-day high, 54.90. And Triple D, I just made the comment that I liked your laugh, and you know who your laugh kind of reminded me of there. And I think you're going to have to be like over 40 to know who this is, this cartoon character. But do you remember Precious Pup?
No.
No. What about you, Spencer?
Welcome to the 30s.
No.
What show was
Sorry.
Precious Pup off of?
That was, I think Precious Pup had its own show.
Oh,
And it was like the laugh was,
definitely before my time.
A real sneaky laugh like that. We'll have to find it. Maybe I didn't want
Is
to do
that
it for the
different than my normal laugh?
whatever that laugh you just did.
See, I tried a couple different laughs.
Is Precious Pop related to Underdog? I know that one.
Oh, okay.
All right,
Joel, you date yourself so much on this show, and I never know any of his. I never know any of his because it's all from like the 1950s.
No, it's later than that. I bet you someone does. I bet you Spinner does. Spinner better
Precious
remember
Pop?
that. Yeah. Yep. All right, we got 6 minutes here to the close. As I said, S&Ps are pumping up near the highs of the session.
I'm struggling to find a stock today that I want to come out and buy here because we're trading up this much. I'm just not jumping into stocks. So
can I give you one? Can I give you
something?
One? And this is not based on anything other than mania, but the SpaceX launch is tomorrow.
Oh, yeah.
That's tomorrow. It's the first
looks good.
First manned mission with the SpaceX rocket. They're going on the ISS. Launches tomorrow. I would bet there is a ton of enthusiasm over the next few days and weeks about the space industry. About
did they do an offering?
SpaceX. Did who do an offering?
A space. I believe they did an offering recently.
Probably.
Like they did an offering.
I mean, yeah. They probably did something.
15. That was from last week. Yeah.
Okay. So in any case, I mean, I'm looking at SPC or UFO. This is just a bet on enthusiasm, but I bet you it's going to dominate the news tomorrow.
All right. You found actually a chart I don't mind here. We'll set the trade up for you here. Spencer Israel coming to the rescue. Double bottom from the last 2 days, $14.62. That's your stop out. Do I want to buy it up 3.62%?
Oh, what?
Really. I don't know if you're going to get
3%, Dennis. Come on.
What's 3%? You know what's 3% on space? There's room to $20 here. So on a pullback here, yeah. You know what? I don't mind the space chart SPCE. 1462 again would be my stop out point. So again, on any trade, know where your out is. Before I put the trade on, I look at it. I was like, okay, that's where I'm going to get out if it doesn't work out right. Mostly for swing trades, that is. Obviously, when I do different arbitrage strategies, it's different, but for the most part, I'm looking when I'm doing a swing trade setup. I'm like, okay, I see a setup here. It looks like nice support down at the $15 area.
Yep.
So that's how I'm looking at it here too. Is I'd stop myself out on the double bottom there, room to 20. So and if you've got a story coming, that's even better. So if you've got some type of catalyst coming up, that's even better. I love the pre-catalyst play where you have something coming up in the next few days and you see a run up before. We know I talk about the earnings run ups all the time, and obviously NVIDIA was a great one for earnings run up. It was running way up into the reports. So catalysts are awesome. You say you've got a catalyst here, which I didn't know about with the SPCE. It's up here a little bit this morning. Maybe you could get her at $16, right in the low 16s.
Yep.
Stop yourself out for $1.50. Yes, it's 10%, but it's a wild stock. I don't mind the setup here. I like Spencer's real.
And again, this has nothing to do with Virgin. There's nothing to do with the company. Virgin Galactic has nothing to do with the launch tomorrow. I'm just betting on
Tesla.
I'm just betting enthusiasm on the space trade. That's all.
Right.
That's all this is. This has nothing to do with
People will be searching for tickers, SPCE,
exactly.
and that's it. What Dennis talked about, we getting in at 16, which would be near the top of the range from yesterday or from Friday, several days ago. So if you're buying at 16 and using the close as a stop, 1574, I don't know if they're going to get it unchanged. Things really open up on the upside to 1680. And you happen to get right there in the pre-market trading, right at 430, you got to 1679. So if you're willing to risk, 30, 35 cents, 1610, why not take a look at that pre-market high, which coincides with Friday's high.
More tickers, Spencer. You came up with a good one there.
Yeah,
Give me one more. Hunt them down.
I don't have any more.
I've looked through a lot of charts here this morning, and I'm not seeing a lot of things I want to chase.
No.
Thanks, Joel.
You know what, Dennis? It's worth noting that ASCO was this week, the American Society of Clinical Oncologists. Mm-hmm. So there's it's going to be virtual. There's probably going to be some headlines from cancer-related drugs and cancer companies. I couldn't tell you who. Merck will be involved, as they always are. But I don't know. Maybe watching for ASCO headlines, but I couldn't really tell. I got nothing else.
One tick.
I like the sell on Merck. That's my pick for the day. Sell on Merck in his strength, but it's already off. It's already off from those highs.
Yeah,
so you get that thing up near 80. I think it's a good short. That's just a day trading call.
Okay. And as far as the S&Ps go, we knocking on the door, the pre-market high, why not test that March 6th high at 30, 25, 75? That'd be a little bit above our 9-day average trading range, but hey, why not?
Hey, here's one. What do you do with cannabis here? It had a huge week last week. Canopy Growth, Kronos. The 6 cannabis ETFs were like the best performing ETFs overall for non-levered ETFs last week. Just
it was a massive huge week led by ACB. ACB was the catalyst that got us going here. I mean, there's a play here to buy these things on pullbacks. They're getting some love here now, so it's been a while. Valuations don't make any sense, but valuations don't make sense on a lot of things, so it doesn't matter. You get a pullback in some of these pod stocks, they're interesting now. They're at least showing life. They've been showing death for the last year. So now that they're showing life, I think that's, an opportunity maybe if you get a pullback. Again, I'm not going to chase stocks, but there's definitely some opportunities there. VFF was one that really went on Friday, and I was looking at this one. I'm kicking myself because I was looking at it around $4 when it started to break out there. Village Farms, that is, and boom, it just blasts off, and now it's $5.95 this morning. So now you look at it and you're like, all right, I missed the boat on this one. I'm not buying it at $5.91 when it's $4 2 days ago. So it's up 50% in 2 days. But there's opportunities here. Free is starting to show some life here above $4, trying to break out a little bit there. CGC, CRON, all having good days this morning, but again, hard to chase. And if you're coming in this morning, a lot of these stocks are already up 5-6% this morning or more. So I don't like chasing. And that's the problem with today on the buy side. It's like, if I was long stocks as trades, I'd be ringing the register on a few of these. And remember, just because we're up doesn't mean your stock's necessarily going to go up. Teladoc was trading up earlier this morning. It's turned to the red. Zoom, we know some of these stocks move counter to the market. Peloton, if you're a Peloton investor, you're wondering, why is my stock down when every other stock is up? Because this is a play against the reopening. And we are having a reopening rally here this morning. That's why Peloton, it's benefiting from the lockdown. So as we reopen, you will see money possibly coming out of a stock like Peloton. Gaming stocks probably going to have a weaker day today. I'm sticking with my Activision, my Take-Two, some of these because I still think the gaming has turned a corner here, and I think it's still there's still a play. Even I think they could show some weakness. Like maybe if you're a day trader, you take some profits here. But as a long-term investor in these companies, I still believe in them. So.
All right, I'm going to hop off here, go on hotmic.io. We missed a lot of symbols here. You can join me under code Joel317, and I'll be covering the stocks that we missed here in the chat. So everyone have a good day.
Yep. Thanks to everyone who joined us today. Thanks to our guest, Craig Johnson. Please remember, all the information from our show is meant to be used as informational purposes and not for investing or trading advice. Joel and I will be back at 3:40. Everyone have a great rest of your Tuesday. And good luck out there.